But yes, on the losers front, you can see Hindalco towering the list on the Nifty 50 laggards list. That's showcasing a decline of about 3% cut. Nestle following that with about 2% loss. Reliance Industries not doing well. 1.5% cut coming in for there as well. Tata Steel, Eternal, M&M, Ultratech Cement, all of them remaining some of the top Nifty losers for the day as well. So yes, the sentiment has been quite cautious. Even for the global end of the markets, we've seen that the US futures have extended the losses. Dow futures is down anywhere about by 400 to 500 points. And the Brent crude oil prices, that continues to remain at elevated levels of about $109. But yes, let's understand how the last minutes of the trade looks like, how you should be positioned going ahead. I'll quickly go across to Nilesh Jain, who is the head vice president, derivative and technical research at Centrum Finverse. Nilesh, good afternoon. So good to have you back. Nifty back in the red. It's registering a weekly loss after back-to-back weekly gains. So what's your assessment of how markets fared this week? And of course, what lies ahead?
Very good afternoon, Nilesh. Absolutely. So, in fact, in this week, which started on a cautious note with a gap down opening, we did see some bit of rebound as well. But once again, Nifty is facing resistance at its 50-day moving average, which is right now placed at 23,800. So, 23,800 going forward will act as a very strong resistance. And on the lower side, recently, in fact, a couple of days back, we saw Nifty found a strong support at 23,262. So that continues to act as a strong support. So we expect Nifty to oscillate in the broader range of 23,200 to 23,800, where 23,800, it is very important that Nifty should take out that important mark for any possibility of a short covering. That's the 50-day moving average as well. The momentum indicators and oscillators have already turned bearish. We have seen a sell crossover on MACD, and RSI is right now below 50 mark. So that is also indicating some bit of a weak undertone going forward. On the other hand, if you look at the Bank Nifty, which continues to remain under pressure throughout the week, and we have also seen an underperformance compared to the Nifty index. And this has been the fourth consecutive weeks of lower top and lower bottom formation. So we expect further pressure to continue in the Bank Nifty towards 53,300 or 53,000. And on the upside, it is important that it should give a decisive breakout above 54,000 on the closing basis. Then only we can expect a pullback move to continue. But overall, on a weekly closing basis today, it's a quite disappointing close we are getting in both Nifty and Bank Nifty. Volatility index this week has surged more than 11%, and it has crossed 18.50 once again. So a rising VIX is still a cause of concern. A break above 20 will add further selling pressure in the market. So overall, we expect market to consolidate in a narrow range where at the high level, some bit of supply once again that cannot be ruled out.
Okay, consolidation is likely. What about the Bank Nifty index, Nilesh? Any levels that you're watching out from here? Because you can see that the index is down by about nearly 1% itself in today's trading session as well. So any levels you want to specify us here?
Well, similar to the Nifty, in fact, in the Bank Nifty as well, we have seen a correction. In fact, Bank Nifty underperformed compared to the Nifty index. It has already made an attempt to fill the gap, but the lower end of the gap area support is still placed at 59,300. So quite possible going forward, we may see Bank Nifty making once again an attempt to fill the gap entirely and move towards 53,000 kind of levels. We have seen a sell crossover, and in the MACD and RSI also slipped below 40 mark. So overall, given the broader setup, the Bank Nifty is likely to underperform and structure comparatively looking more weaker than the Nifty index. So overall, sell on rise kind of a structure as of now till the time it doesn't take out 54,500 on the upside. So whatever pullback we get, that might get sold into. And given the kind of a setup in the PSU banking space specifically, where post numbers we have seen a crack in SBI, Canban close to 6% each, and the broader setup in the PSU banking space continues to remain weak. So given this kind of a broad setup across all banking names, I believe the pressure on the lower side is likely to continue.
Okay, pressure on the downside could continue. All right, let's address the broader end of the markets. They have been sulking in today's trading session, both the mid-cap and small caps in the negative territory. But yes, the pressure for the small cap index has come after 7 days of straight weekly gains. The index is down by about 4% so far this week. Nilesh, do you think this is a start of a consolidation period for the Nifty small cap?
Well, see, comparatively, small cap is looking more weaker now. It has a similar structure to what we are witnessing in the Bank Nifty in terms of a weakness. So I believe Small caps are likely to underperform from here, and in fact, we have seen 4.5% correction in this week itself. So it has already underperformed. And given the kind of a strong run up that we saw back to back in last 5 to 6 consecutive weeks, all the way from 15,000 to 18,700. So after such sharp run up, there could be possibility that we may see some bit of retracement towards 17,400, 17,200 on the lower side. So we expect small cap to underperform, and it is better to stay away for the time being from the small cap counters. Whereas comparatively, the mid cap is still better placed, and it is still trading well above its all long-term, short-term moving averages. The immediate support of its 21 DMA that is placed at around 60,300. So as long as that is intact, we can expect some bit of consolidation and a pullback move in mid cap index.
Okay, got it. All right, let's talk about some of the sectoral movers. We'll first touch base for Nifty IT index because it's seeing some bit of a relief today after 4 days of consecutive loss. But Nilesh, how would you read the sentiment? Because the AI risks still remain. The sentiment is likely to be cautious for the time being. And from a near-term perspective, how do individual stocks look like?
Lavisha, from a near-term perspective, the overall broader structure of Nifty IT index continues to remain on a weaker side. If you pull up last 6 month chart, you can clearly see on the chart that this particular index has clearly underperformed compared to the other sectorial indices. As far as levels are concerned, it has a multi-month support zone at 26,500. Right now, it is trading at 27,700. So that level is going to act as a very strong support. That's a multi-year support zone that is placed at 26,500, 26,300 zone. Now, as far as individual stock is concerned, today, no doubt, we are witnessing a relief rally across all IT names, be it Infosys, TCS, etc. But very unlikely to be a sustainable on the upside. So this pullback, if at all it moves further on the upside, that is likely to get sold into. So sell and rise kind of a structure across all Nifty IT stocks. So better to avoid taking any contraband for the time being.
Okay, got it. That is your Nifty IT index. But yes, let's come to the talk of the street today. That's your OMC stocks that continues to remain depressed even after companies have raised the petrol and diesel prices by about 3 rupees per litre. Now, the fall and the depression comes in as the industry estimates suggest that a hike of nearly 10 rupees per litre for petrol and 15 rupees per litre for diesel would be required for all of these OMC companies to fully break even at the current crude price levels. And that's why you can see HPCL, BPCL anywhere down by about 3% in today's trading session. Nilesh, what's your take? Of course, the kind of fall they were seeing at the elevated crude oil price levels, even after the fuel price hike, it looks like all of them are not satisfied yet. So, in the near term, how do the charts look like for you?
Lavisha, first of all, this hike in the prices were seen after a long time. In last many years, we have seen steady prices as far as petrol and diesel prices are concerned. But if you see crude oil prices, which used to trade somewhere around 60 to 70, has already moved up to 110 to $120. So given this kind of a sharp run up, I think this minimal hike of 3 rupees is not likely to provide any kind of a support to OMC stocks. As far as structure is concerned, we continue to remain bearish across all OMC counters. BPCL, we expect a move towards 270 on the lower side. The structure appears on a weaker side. Sell and rise kind of a structure across all OMC counter. As far as IFC is concerned, we expect a move towards 130 on the lower side and immediate resistance at 140. So overall, the broader structure across all OMC stocks is looking weak. And as long as Brent crude remains at elevated level, that will add further kind of a selling pressure across all OMC counters.
Okay, all right. That's the cue for all of these, MC stocks. And of course, so could be that, we would need more fuel price hikes to even cheer up all of these counters as well. But yes, let's move on and talk about some of these city gas distribution stocks. They were mixed in today's trading session. Adani Total Gas, Gujarat Gas, and even all of these Mahanagar Gas as well. They are all fairly in a sideways trajectory, even after the CNG prices were hiked by about 2 rupees per kg. Nilesh, what's your call on the CGD stocks? What looks like ahead for all of these going ahead in the near term?
Lavisha, in fact, across all these city distribution companies are looking better place as of now. If you see the structure of Gujarat Gas, where we have seen some bit of respite coming in, not expecting any sort of a major upside, but yes, some bit of relief rally that can be seen. But the broader structure is more sort of a similar to OMC, not looking that weak, but yes, some bit of consolidation, some bit of correction seems to be likely on the chart going forward. So a pullback followed by correction, that is something that we are expecting across all these gas distribution companies.
Okay, all right. Let's move on and talk about one particular stock that has come in after a good performance for the March quarter. That's your United Spirits. This stock is doing well, 4% gains, and it's holding strong throughout the day as well. We've seen that the company had reported a strong operational beat in the quarter. Margins, gross margins had increased sharply by about nearly 400 basis points from the last year period. EBITDA margins also expanded to about 19.4%, and the management remains quite confident of delivering a medium-term guidance of about double-digit growth. So yes, the stock is also doing well in today's trading session. Nilesh, do you think these gains can sustain going into the near term?
The broader structure is still not looking that promising. No doubt, we have seen a strong rebound in this particular counter from the levels of 1250 all the way to 1324 right now. But still, it has many multiple resistances. Immediate hurdle is placed at 1350. That's its 200 as well as 100 moving average resistance, followed by 1400 level. That is going to act as a very crucial resistance because there's a major falling trend line resistance for this particular counter. So a break above 1400 will give more confidence and a confirmation of a breakout. Then probably we can expect a short-term bottom is in place. Then upside will again open up for 1500 to 1550. But for that, it is important that it should take out 1400 level on the upside. Having said that, at current level as well, there could be possibility that we may see some follow-up on the upside. 1250 is a very strong support. As of now, looks like it is likely to oscillate in the range of 1250 to 1400.
Okay, all right. That's the cue for United Spirits. Let's move on and talk about another stock. That's your PN Gadgil. The stock is logged in a 10% lower circuit in today's trading session, and we've seen that the company's EBITDA margin during the quarter narrowed to about 3.8% from 5.9% last year. And the stock is down in 3 out of the last 5 trading sessions and is set for the biggest single-day fall on record since its listing day. Nilesh, what's your call for PN Gadgil? Of course, you're seeing in that a lot of jewelry stocks have come under pressure after the import duty hike on gold. So what's your call in PN Gadgil? And of course, all of the jewelry stocks as well, be it your Titan, Kalyan Jewelers as well.
As far as stock-specific PN Gadgil is concerned, the structure is looking extremely bearish. Reason being, it has given a breakdown today. Below is 250 as well as 100-day moving average. So all important levels have been taken off decisively in today's trading session. So structure appears weak, and we are likely to see a follow-up move to continue on the lower side towards 530 to 500 that can be tested in the near term. Now, coming to this particular sector as a whole, be it Kalyan Jewelers, Titan, or other jewelry making companies, after import duty hike, we have certainly seen selling pressure across all these stocks, which we believe is likely to remain under pressure going forward as well. So near-term outlook across all these stocks continues to remain bearish.
Okay, all right. Remain bearish for the near term. That's the cue for all of these jewelry stocks. But let's move on and talk about data patterns. That also remains one of the top losers on the BSE small cap index. It's traded with quite a bit of a loss. And the company's revenue dropped by about 13% during the March quarter. EBITDA and margins also saw relative expansion. But even after this drop, the stock has been up by about 41% this year so far. And the stock has made a decent recovery from the day's low level. Nilesh, what lies ahead for data patterns? Any call on the particular counter?
Today, no doubt, we have seen a sharp decline, but good part is that we have seen some bit of recovery coming in, and specifically after the recent impact after gap down opening that we saw throughout the day, it has made an attempt to witness a strong pullback. Apart from that, it has taken a very strong support at its 50-day moving average that is placed at 3,550. That is going to act as a strong support. This correction, I think, is giving a good opportunity. If somebody is looking to make a fresh entry, then declines can be use as a buying opportunity. I'm not expecting any major correction as long as it sustains above 3,500. It looks like merely a retracement in the strong uptrend. So this correction can be used as a buying opportunity. Gradually, we can again expect a move towards 4,000 plus.
Okay, all right. That's the cue for data patterns. All right, let's move on and talk about GE Shipping. That's hit a fresh 52-week high in today's trading session. We have seen that the company reported a nearly threefold jump in the March quarter profit, which was aided by strong shipping performance and vessel sale gains. The sharp rise in profit was also a result of the combination from the sale of vessels and forex gains. And the company's shipping business also did well, growing by about 46% on a year-on-year basis. Though the stock has hit a fresh 52-week high, it has cooled off from those levels, but it's still up by about 4% in today's trading session. Nilesh, what's your call for GE Shipping? Any target levels on the horizon?
Well, a very good setup I can see on the chart, a very strong run-up that we have seen recently, not only in G Shipping, across all shipping companies, be it Shipping Corporation of India as well, where we saw a similar kind of a run-up. So overall, the broader structure continues to remain on a positive side. And today, although we are witnessing some bit of profit taking after hitting highs about 1620, but the broader structure still looks strong, and we can expect this momentum to continue gradually towards 1650 to 1700 in the near term. Stop loss for fresh entry should be kept at 1440. Not advisable to chase the momentum at the high level, but better approach would be to buy on decline. If at all you get any dip towards 1500, that can be a good entry point. But the broader structure continues to remain bullish.
Broader structure remains bullish for GE Shipping. All right, let's move on and talk about Sheela Foam, because this stock has also fairly gained in today's trading session. It's up by about 11% after the company reported an improvement in the earnings for the March quarter. It reported a net profit of about 91 crore rupees compared to 13 crore rupees in the year-ago period. Revenue also rose by about 24% on a year-on-year basis. EBITDA also jumped to about 116 crore rupees, and margins also expanded sharply. So it was an all-round performance for Sheela Foam, and that's why the stock has reacted quite positively. Nilesh, what's your call? Is it a buy at the current levels after Q4 results?
Well, Avisha, if you can just pull up last 4-year chart, that will give a better picture for this particular counter. Reason being, in the year 2022, it has made high about 2000. And since then, we have seen a constant decline, formation of a lower top and lower top formation. Whatever pullback we got was being, used as a selling opportunity. After a long time, for the first time, we have seen the counter breaking about 200-day moving average, but still not giving that kind of confidence that it has bottomed out. It is looking like merely a pullback move. We can expect this pullback may extend towards 660 to 720. It is important that it should take out the important level of 780 on the upside. Then probably we'll get first sign of bottoming out. But as of now, at current level, merely a pullback trade can be initiated, keeping a stop loss below 560 and a move towards 660 to 720 that cannot be ruled out. But overall, the broader structure still appears sideways to be.
Okay, broader structure looks sideways for Sheela Foam. All right, let's move on and talk about the Nifty Metal Index. Nilesh, what's your call here? It's seeing a bit of a profit booking after the kind of rally it saw this week itself. But in the last couple of weeks, the index has done well. What lies ahead for Nifty Metal, or any individual stocks that you like from this space?
We continue to remain bullish on metal space since a long time. Today as well, we have seen a fresh record high in the Nifty Metal Index on about 13,628 levels. But we have seen a sharp profit taking on the back of profit taking that we are witnessing across all base metals, be it aluminum, copper, zinc, lead. Across all base metals, we are right now witnessing some bit of profit taking, and that's the reason some bit of retracement is happening in this metal index as well. But having said that, the broader structure continues to remain bullish. Not advisable to buy at current level. Better strategy would be to wait for some more correction. And if at all you see any further decline, that can be used as a buying opportunity, specifically in the names like Hindalco, that particular counter from aluminum space, we continue to remain bullish. Ideal entry range could be 1030, 1040, keeping a stop loss below 970. We can expect a position upside towards 1120 to 1150 in the near term. Another counter within this space, that's Vedanta. We also remain bullish on this particular counter for position upside of 350 to 360. Similarly, the ideal buying range in this particular counter could be somewhere around 310 to 300. That's a good entry point, keeping stop loss below 280. That can be added on declines. But apart from these names that we have mentioned, other metal stocks are also looking better. But better strategy would be to buy in a staggered manner.
Buy in a staggered manner. All right, let's talk about Nifty Realty Index. This particular index is down by about 2% in today's trading session, and it remains one of the top sectoral laggards for this week, 8% down. Nilesh, what's your call for Nifty Realty? Do you think it's headed for a bigger fall going ahead?
Well, absolutely. I'll tell you the broader perspective. Before that, if you see the US 10-year bond yield, where we have seen a multi-month, multi-year breakout. So US 10-year bond yield jumped near about 4.54. That's the highest level that we have seen in the recent time. What basically that indicates, going forward, we are likely to see a rate hike, and that is likely to be followed in Indian equity market as well, where RBI may make an announcement, not on immediate basis, but going forward, there's no scope of any rate cut given the kind of rise in the inflation. There are certainly chances are high where we may see some bit of rate hike. So that will definitely have an impact on all reality counters. The setup is also looking negative, not from a short-term perspective, but from a positional perspective as well. If you see, in last 1.5 year, we have seen a constant supply coming in at the high level. So whatever pullback we got that has been sold into, be it DLF, Godrej Properties, Sovereign Realty. So all these sectors, all these stocks, in fact, in the realty counters are looking weak. Specifically stocks like Lodha, where we have seen a breakdown as well on the chart. So we can expect a follow-up on the lower side to continue in the near term.
Okay, all right. Some cautious sentiment to continue for Nifty Realty. But yes, the last rates coming on your screen when Nifty has closed way below that 23,700 mark. Throughout the day, we have seen that Nifty has fairly been range bound. But yes, it's closing the day quite in the bit of a red. Even Sensex for that matter, losing about 105 points. And even for the Bank Nifty index, that's down by about anywhere about 300 points, more than 0.5% decline coming in for the Bank Nifty as well. Nifty Midcaps also in the lower trajectory with about 300 points decline, settling the day with about 0.5% decline as well. So yes, the market breadth that continues to be in favorable towards the decline. So you can see that the advanced decline ratio is standing at about 1:2 at the current juncture. India VIX is also, mildly inched up, but still remains at about 18 odd levels, showcasing that there is some kind of a panic in the markets at the current juncture. Even rupee, for that matter, that's crossed that 96 against the US dollar for the very first time. So this indicates that, even after the fuel price hike, there are some concerns on the street in terms of inflation risks and, of course, some macroeconomics uncertainty going ahead as well. From a sectoral point of view, it's the Nifty IT index, which has showcased a bit of a smart rebound in today's trading session, despite the 5% fall so far this week on the kind of AI risks and panic. Nifty IT index up by about 1%. Even for Nifty Media index, that's up by about 2%. Nifty FMCG and Pharma indices, both of them settling the day in the green. But barring all of these sectors that I mentioned, all of them, the rest of them have been reeling under pressure. You can see Bank Nifty with about 0.5% decline, Nifty Metal Index showcasing a decline of about 2%, Nifty Realty also with about a 2% decline, and PSU Banking Index also showcasing a decline of about 2% as well. The broader end of the markets, they also remain in the declining trajectory. Both Nifty Midcap is down for the second consecutive day. It's down by about 0.5% as well. Small cap index also down by about 0.5%. And it's with that it has snapped and broken that's 7 weekly gains as well, with 0.5% decline. So yes, so far this week both of the broader end of the markets have also remained in the negative trajectory. But apart from that, let's take a quick check of how the gainers and losers look like on the Nifty 50 front. You can see amongst the gainers, Tata Motors Passenger Vehicle leading the list with about 5% gains. Following that, we have Dr. Reddy's, Tech Mahindra, Infosys, Coal India also in one of the top Nifty gainers. And amongst the losers, you can see Hindalco, Tata Steel, both of these metal counters leading the losses from the Nifty 50 losers list with about 1 to 3% decline. Then you can see the Nestle India also leading the declines with about 1.5% decline. Reliance Industries, M&M, Ultratech Cement, JSW Steel, they remain some of the other losers on the Nifty 50. So yes, those are the key takeaways for the market. But yes, let's come back to Nazara Tech. That remains one of the top gainers on the small cap index. It's gained by about nearly, it's gained significantly by about 15 to 16% in today's trading session, after we have seen a large block deal with about 5% equity that changed hands in the morning. And according to sources, it looks like Zerodha's Nikhil Kamath and the existing shareholder Axana Estates, they are likely to remain the buyers in the block deal, though we'll get to know at the end of the day who the buyers of the block deal are. But yes, good set of gains, 13% gains coming in for Nazara Tech. Nilesh, coming to you, Nazara Tech, how does it look like from a near-term perspective?
Well, the setup has turned positive with the recent development that we have seen on the positive side. We did see a major correction, a crack in the year 2025 in the month of August. But after that, it's a broad-based long consolidation we have seen in last 6 to 8 months. Finally, it has broken out on the upside, a good rectangle pattern breakout, I would say, on the chart. So we may see a gradual uptick to continue towards 330 to 350 on the upside. So another 10 to 15% kind of uptick can be seen in the near term. The setup from a short-term perspective looks positive. And if somebody is already holding the long position, can keep a trailing stop loss at 280. Fresh entry at current level is not advisable because the risk and reward is not looking favorable. So better avoid taking any fresh entry. But yes, already those who are holding can stay invested.
Okay, got it. All right, just one last question before I let you go, Nilesh. What's your top picks and any good investing strategies that you have for us today?
Well, Avisha, see, broader setup, as we mentioned earlier, that the Nifty, Bank Nifty, even the small cap index is not looking that great. And we are likely to see this consolidation going forward to continue in the coming week as well, because the undertone is looking weak, specifically in the banking space, where the major heavyweights are not outperforming, not performing at all. In fact, we are witnessing some bit of selling pressure coming. So the focus should be on stocks and sector specific, where we continue to remain bullish on the pharma space. Nifty Pharma Index is looking strong on the chart, where we have seen a strong breakout about 24,500 in the index. So we can expect some bit of follow-up move to continue in the pharma space. Dr. Reddy remains our preferred bet with an upside potential to move towards 1400 plus, and stop loss can be placed below 1300. Another space that we are liking is telecom. Within telecom space, Bharti Airtel, Indus Tower, in fact, Idea as well has given a good breakout after a long time. So keep an eye on telecom space, where Bharti Airtel looks positive for 1950 to 2000 kind of levels positionally. And yes, so these are few stocks and sectors that we are liking, but the broader setup of the market is not looking that great. We expect this consolidation to continue.
Okay, got it, got it. All right, on that note, we have to let you go, Nilesh, but thank you so much for your time and joining us.
Thank you, Lavishan.
All right, markets fairly in the negative territory.